Hey guys, welcome back to my channel. So it's been a few months since I've uploaded a video to YouTube. So I thought I'd get back into the groove of things and start uploading more regularly. As you can see by the title of today's video, I'm going to go through a scalp strategy with you guys. So this scalp strategy is a volume-based strategy. You've got to obviously understand price action and know your candlesticks well enough to execute, properly. So the indicator that we would use is the stochastic indicator. This is how you would find it. So you click on, so if you're on TradingView, you would click on your top left corner of the screen where you've got indicators. You click there and you're going to type in stochastic. Stochach. Okay, so it pops up stochastic. Then you favorite it. So once you favorite it, it will pop up at the bottom of your screen as such. And once you've got it at the bottom of your screen, you need to adjust the settings. So on your bottom left corner, you're going to go to settings. And the settings are as follows. So you're going to put your inputs. Your percentage length would be 14. Your percentage smoothing is 3. And your bottom percentage smoothing is also 3, right? So it's 14, 3, and 3. Your time frame, you keep the chart, and if you go to style, you can obviously adjust it, the colors accordingly. Your upper band, okay, so the upper band level, we're going to set it to 90. And your bottom band or lower band, we're going to set that to 10. I'm going to explain to you guys how we use these band levels and what happens at those levels. So, okay, so once you've done that, your stochastic should pop up at the bottom of your screen as such, as you can see. So as price moves on your chart, right? So you'll see that you've got your higher highs, higher lows, lower lows, and lower highs, etc. Accordingly, on your stochastic, you will see a similar movement between the two bands, the upper band and the lower band. So what happens here is at the upper band, right? Let me just switch screens so that we can see it. So if I go to the whiteboard. Okay, so at the band on top, that's going to be your 90. That's your 90 level, right? And the band below is your 10 level. Which is going to be, let's mark this here as overbought. So the volume is currently overbought, right? So that means this is price. Price does its thing. Okay, so every time price approaches the overbought area, it means that buyers are reluctant to step in at that level, because the name of the game is obviously to buy low and sell high. You don't want to be buying at this level when price is at a high. That's not how you should be trading. You want to get in on a low and ride the wave up, right? So hence why at the overbought level, the 90 level, we would be looking to short the market, right? So we're looking to short the market at this area. And at the 10 level, we're looking to go long on the market, right? So keep this in mind. Why are we looking to go long at the 10? Because once price approaches the 10 level, we know it to be oversold. So price is now oversold at the 10 level. So every time price reaches the 10, we're looking to buy, and every time price reaches the 90, we're looking for a short opportunity or a sell opportunity. So if we can just switch back to the chart, I'll show you guys quickly. Okay, so back on the chart, we are looking at these areas, right? So if you look at the 4-hour, for example, right, what happens when price approaches the 90 level on the stochastic? Can you see here at this area? Price U-turns, right? So we've got a nice U-turn. Now How you would get in on this is obviously you need to identify an area of support or resistance or a candlestick confirmation at that area. So if we're looking at the 4-hour chart and we have to take this trade based off the stochastic and this area being the oversold, overbought area. So remember, buyers stepped into the market down here, rode this wave up, right? It's now reached at this area. We've now reached a resistance. Can you see that? So we've reached a resistance at that area. And at the resistance, we have touched and actually surpassed the 90 level, which is our overbought level on our stochastic. So at that level, we're looking to short, right? And there comes our nice shorting opportunity where we've got the engulfing candlestick. So you would actually enter off that engulfing candlestick, stop loss above the resistance or above the candlestick formation there. And you would short that market back into previous structure. So your take profit one area would be down here. Let's just mark that out. Take profit area there, take profit one area would be there. First take profit, sorry, would be there. Second take profit would be next structure down here. And then you'd obviously ride this back into previous levels of support. So, and that's actually, yeah, that's actually a good 1:5 risk to reward trade. And that's just based off the 4-hour setup that I showed you guys. Now, this happens on any time frame, guys. This strategy is perfect for scalping. You can use it all the way down to your 15-minute, your 5-minute, even your 1-minute time frame. And the same thing applies. Obviously, you have to be trading in the direction of the trend, right? So if I were to just look at this again, our trend, why did we look for a shorting opportunity? Because price was trading to the downside. You can see that we've basically followed a trend to the downside, and we are looking to short the market. We've got a formation of lower highs and lower lows that have formed for a couple of weeks, and we tapped into an area of resistance plus a trend line, plus we've got that engulfing stochastic is oversold, overbought at that area, sorry. So we've got the stochastic overbought at that area as well. So multiple confluences into this, and hence why you would have sold at that area. Now, if we drop down to our lower time frames, just want to show you guys how you can scalp this. You can go down to your 1 hour, the same thing applies. So again, exactly the same thing applies. Look at your 1 hour chart. If you look up here on the 1 hour chart, price has hit the overbought area, resistance, and that's how you would have caught it. There's also an engulfing candlestick that appeared, and bang, dropped down for thousands of pips. Look at this area here. We approached the 10 level on our stochastic. We know that its price is oversold at this area. So what happens at this area? Price then U-turns. You've got the pin bar that appears, and then the candlestick after is engulfing, giving us a nice morning star formation off that level. Likewise, down here, this is where the market U-turned. You can see that we formed a support area in the market down here, and price turned off the 10. Bang. Same thing happens up here. So it's just based on volume at that present moment in time. Obviously, the volume decreases, so the volume of buyers would decrease as we hit the overbought or the 90 area, which is up here, because now buyers are reluctant to step into the market. Again, up here, buyers are reluctant to step into the market. So as long as you follow the trend, you are pretty much, you're safe. You're completely safe, guys. You got to trade the strategy with in accordance with the trend. And yeah, let's go down to the 15. Okay, look down here. So we had a nice buying opportunity at this point. Can you see that at this point, market was oversold, and we had a morning star that appeared? You would have actually entered off the first sign of buyer stepping in, which was this pin bar that had formed and gave us newfound support at this area. That was your entry. You could have scalped that. You would actually target previous structure. So your first take profit would be this level here. And yeah, you would have done this. If you were to take this trade there, you would look at that, catch it there, stop loss below and you target previous structure, first take profit in that area. So first take profit in that area, and then you obviously target your next structure, which is up here. Likewise, same thing applied here. At this point, market was approaching or double bottomed. You can see a double bottom on the stochastic just above the 10 level. So that's a good confirmation of a buy about to happen. So we've got this engulfing candlestick. You could have entered off the engulfing on this time frame, or you could have entered off the 5 minute at that area and got an even sniper entry. So if we look at it down here, there's your morning star here, and you would have entered off that area there. Why were we looking for lows? Why were we looking for a buy at that point? Because at this point, can you see what the market did here? It gave us a double bottom formation on the 10. So on the oversold area of the stochastic, we got a double bottom that formed down here, and we had a beautiful morning star candlestick confirmation pattern down here. And yeah, you'd have caught this basically like that and back into previous structure. Okay, so yeah, that basically sums up the strategy, guys. I hope it makes sense to you. If you've got any questions, please pop it in the comment section below. Also, feel free to comment down below what you guys would be interested in, what sort of videos you guys want to see. Drop down your suggestions down below. And yeah, don't forget to like and subscribe. I will be keeping you guys posted with a lot more content going forward. Take it easy, guys. Cheers.